For example, if I just told you, I bought some Bitcoin, but I also bought some ice cream trucks. I might also have bought some Luna. How would that have worked out? Right? I might.
Not very well.
Right? But here's the thing. There are thousands and thousands of public companies. People want to invest in something that they understand, that they can trust. So if you're going to be a theme park company, that's what you should do. If you're going to be a movie company, if you're going to be an oil company, you should be a pure play, and you should focus, in a laser-like way on that, because that allows a rational investor to put you in their portfolio. For example, like maybe you hate Bitcoin. If MicroStrategy has a strategy, which is we're long Bitcoin, we're levered long Bitcoin, well, then that's good, right? Because now you can short us.
"23 agonizing days have passed since Bitcoin last closed above $32,000, and the 10% rally that took place on May 29th and 30th is currently evaporating as Bitcoin price retraces toward $30,000. The move back to $30,000 simply confirms the strong correlation to traditional assets, and in the same period, the S&P 500 also retreated 0.6%. In today's video, Michael Saylor updates about the recent trends in Bitcoin and crypto space, why thousands of cryptos could collapse, his views on stablecoins, and regulation in cryptocurrency markets. Make sure to stick around till the end of this video, where Michael Saylor reveals the actual reason why he prefers a bear market and why investing in Bitcoin for a longer time horizon is important. So without wasting any time, let's dive right into the video.
Right? Over time, what really matters is the underlying fundamentals, right? And in the near term, you have panics, and the panics cause like risk-off events. Like people panic because inflation is really high, and so they sell the inflation hedge. Huh? Tell me that again. Inflation is really high. The government can't get it under control, so there's a panic. So people sell the inflation hedge, and then the journalists and the modelers say, well, look, we've run a statistical model for the past week, and it shows that when inflation is high, people sell Bitcoin, so it's not an inflation hedge. Huh? Well, if you run the model over 2 years and you look at it since COVID, you can see it's up 229%, and it's pretty clear that gold is not an inflation hedge, and silver is not an inflation hedge, and stocks are not an inflation hedge. Right? And bonds are not an inflation hedge, and currency is not an inflation hedge. That's pretty obvious if you look at it over 2 years. But if you shorten your time horizon to 2 weeks, you can come to the opposite conclusion. But in my opinion, it's pretty foolish to come to that conclusion.
Bitcoin's recovery above $31,000 on May 30th took bears by surprise, because only 20% of the sell options have been placed above such a price level. Bitcoin bulls may have been fooled by the recent $32,000 resistance test, and their bets for the $825 million options expiry go all the way to $50,000. A broader view using the 0.77 call-to-put ratio shows more bearish bets because the sell open interest stands at $465 million against the $360 million buy options. Nevertheless, as Bitcoin currently stands above $31,000, most bearish bets will likely become worthless. If Bitcoin's price remains above $31,000, only $90 million worth of these sell options will be available. This difference happens because there is no use in a right to sell Bitcoin at $31,000 if it trades above that level on expiry.
On the other hand, maybe they like Bitcoin, but they think it's 99% likely to fail. Think about it. You have $100 million, so you put 1% of your portfolio in it, and you want to find someone that actually is pure long Bitcoin, you see? So if we're transparent and predictable, then we allow a rational investor to allocate their portfolio rationally. And they just don't want us to be unpredictable. What happens if we become unpredictable? You see, like if I'm predictable, you might meet with me, understand what I'm going to do, and say, I wanted to put 5% of my portfolio into Bitcoin, and you might actually invest $5 million after a 1 hour meeting, right? But if you met with me and I said, I'm a genius and I can trade everything and I know when to sell and I know when to buy and I'm going to time the market and I have all these algorithms, you're like, well, maybe you do, maybe you don't, but 95% of the time, those things don't work. And the point is, I have just, if you're the investor, you want to hedge the risk. You don't want the management team to hedge the risk. I'm a black box. So after you meet with someone that says they've got some wacky, complicated trading algorithm, instead of actually investing $5 million, you invest zero and you study it for 500 hours. And so let me put it a different way. You could probably raise $1 billion in one day if you're predictable, even from people that don't even like Bitcoin. Whereas if you're unpredictable, you could work for 1,000 days and raise nothing. So you get where I'm coming at. The world wants certainty. It wants clarity. It wants conviction. And it wants you to execute with focus. So it happens that we believe in Bitcoin.
Bitcoin bears need to pressure the price below $30,000 to secure a $150 million profit. On the other hand, the bulls' best-case scenario requires a push above $33,000 to increase their gains to $225 million. However, Bitcoin bears had $289 million leveraged short positions liquidated on May 29th, according to data from CoinGlass. Consequently, they have less margin required to push the price lower in the short term. With this said, the most profitable scenario is a draw, causing Bitcoin price to range near $31,000 ahead of the option's expiry.
Let's look at, since MicroStrategy entered the entire crypto economy, we got involved in the second quarter of 2020. We announced a $250 million Bitcoin buy in August 10th. If you look at the numbers since we actually made our Bitcoin purchase, the money supply expanded 36%. The M2 money supply expanded 36% in the US. Gold is up 7%. Gold didn't track the money supply. If we had bought gold, we would be way lagging behind the money supply. The NASDAQ index is up 19%. It barely crawled forward, but it didn't actually keep up with inflation. The S&P is up 29%. So if you bought pretty much all of the desirable companies in the index, it didn't actually hedge your inflation. It lagged inflation. And why? Because you're owning securities and the corporate management teams have inefficiencies. They're basically an overhead cost. Bitcoin's up 229% since then. And so when you think about that, what's beating inflation? Bitcoin is. What's losing? The traders are all losing, right? And most of the other assets are lagging. And everybody's thinking that they can time the market. But as a practical matter, I think they do a statistic and like 95% of active traders underperform the market. So I think that as I pointed out, if you look at the 2-year, the 4-year, the 6-year time frame, Bitcoin is acting very rationally per inflation. But if you look at very short time frames like 6 weeks, you may sometimes get the opposite of the expected effect in the near term, because you've got other drivers. You have traders that have large pools of capital that are trading with a different model that are dominating the market in the near term. So I think if you're going to invest in the asset, you have to have a clear idea. Are you a trader or are you an investor? If you're an investor, you have to have a 4-year time frame. And then you can only start to make conclusions after you've waited a couple of years. If you're a trader can make conclusions faster. You just look at the correlation. You say, well, NASDAQ traded down 2% today. Did Bitcoin trade down 2% or 4% or 1%? And you're building these back-tested correlated models. And I suppose that works fine. But again, I just think that they're just not intellectually defensible over the long term. Like, for example, the Titanic hit an iceberg. Everybody ran to the deck Okay. The Titanic sailed into the sunshine and it's a beautiful sunny day, 75 degrees. Everybody came to the deck. Okay. So you've got a statistical model. Everybody runs to the deck. You say, oh, the sun must be shining. It's a great day.
Michael Saylor clearly believes Bitcoin will one day be worth millions of dollars, which makes the current downturn of little consequence in the businessman's long-term vision. The entrepreneur says he does not pay attention to Bitcoin's drop from a record peak of $68,800 to the current $29,000, despite the fact that it has reduced the value of the BTC MicroStrategy holds in reserve by $4 billion. Following up on the question, Saylor called the trader mentally foolish, citing the famous story of Amazon's losses in the early 2000s. The entrepreneur expressed the opinion that trying to catch timing on the market is a stupid thing to do, offering as examples Bill Gates, Jeff Bezos, Elon Musk, Mark Zuckerberg, and Larry Page, who earned their billions by building a real product, not trading.
What I think is eventually one day you'll wake up and some country will buy $20 billion of Bitcoin and it'll jump by a factor of 3. And that'll be the thing that's going to drive the price long term is going to be intelligent regulation. As the SEC, the FDIC, Treasury, as FASB, as they issue guidelines, as big institutional investors and big banks get into the space, as countries get into space, I think that'll drive the price up. And I think in the near term, trying to guess what the price is going to be is a losing proposition. Mm-hmm. So I just don't think it's a good idea to even try.
So do you think Bitcoin can continue its recovery in June, or will it crash again? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.